Hi, my name is Kate Bain. I'm the managing director at Charity Intelligence, and I do much of the financial analysis of audited financial statements. Charity's audited financial statements is something I'm very passionate about. And I was recently asked to give a presentation to BDO's nonprofit conference. So I'd like to share that deck with you. And if you have any questions, please feel free to get in touch with us at Charity Intelligence. The presentation is about the audited financial statements for today and how audited financial statements are so critically important, but maybe there's a lack of disclosure and audited financial statements aren't meeting all the needs that we have today. The attitude may be by some charities' finance teams that nobody cares, that nobody is reading audited financial statements, or that it would be too complicated to disclose all the information, and maybe people wouldn't understand audited financial statements. I think that is definitely changing. There is more interest in charities' audited financial statements than ever before, and the audited financial statements are the gold standard. An audited financial statement is independently audited by professionals. It follows generally accepting accounting practices, and it has excellent disclosure in the financial statement, in the financial notes. This is information as a donor, whether you're a government funder or a sponsor, that you will not find in other regulatory filings. So whenever we're asked to do due diligence on charities, the audited financial statements is the ground zero. It's where we begin, and they're critically important. As you may all be aware, Canadian charities have been in the media a lot. There are a lot of great journalists in Canada who are up to speed on how to read audited financial statements. And there is a great deal of passion. Canadians really care about the charitable sector and the not-for-profit sector. So when the media runs a story on a Canadian charity, it's going to garner huge interest. So this isn't a new thing. This has been around at least since the 1970s. And you can see, in 2003, it was the journalists at the Boston Globe on looking into their local charities in Boston that went on to be an Oscar-winning movie. So there's a lot of interest in the charity sector, and that interest is growing, and you've got great media in Canada. The Canadian public is also coming up to speed on some rather complex or obscure accounting terms. And in the media commentary, we've seen a lot of this. We've seen good information helping the public come to grips with what does a related party transaction mean, economic interest, social enterprises, bank covenants, off-balance sheet accounting and fund accounting. So when you're preparing the audited financial statements at your charity, please don't be dismissive. Don't think that people won't understand. Canadians, let's give them some credit, and they're probably smarter than we think. The second pervasive attitude is, I would say, antiquated, and that we're a not-for-profit organization or we're a charity, and it's nobody else's business. Charities are public organizations. You are a registered charity and you receive enormous tax subsidies. You get to issue donation tax receipts. You get to operate tax-free. And you are, by definition, there to provide a public benefit. So by all intents and purposes, you are a public organization. And I really believe that our attitude needs to change from this closed book attitude to being open and to being accountable. When you look at the audited financial statements, you can often see this attitude that we're a private organization reflected on the very first page. Who are the audited financial statements addressed to? And in most cases, you'll see the audited financial statements addressed to the members or to the directors or to the board of governors. I really believe that we need to reflect that our audited financial statements are for the public. And as I said, Canadian charities are public organizations. In other jurisdictions, in the US, in the UK, and in Australia, the government regulator proactively publishes the audited financial statements of their nonprofit organizations and charities. Canada is so far behind in this. And it's a battle and it's a complete conflict with the public's desire for transparency and our antiquated regulations on this. And this is an area where I really believe Canada needs to catch up with how other countries are proactively transparent on their charities. So if you are on the finance team, this is your chance to shine. I really see that the audited financial statements are a way for a finance team to communicate the nature of your organization, not only its finances, but the audited financial statements say so much about your organization's culture, about its level of disclosure, and whether you see your sponsors, your donors, your government funders as partners in this venture together with you, and you are giving them the information that they need to make an informed giving decision. The first thing I would ask is, are you transparent? There's an amazing survey done about Canadian expectations. It was done by the Mutat Foundation out of Edmonton, and it was done over 5 years. And you can see the survey results from 2000, 2004, all the way up to 2013. And it shows year after year, Canadians consistently have high expectations about charities needing to disclose how they spend money. And as Nick Nanos would say, anytime you see survey results in the 80s, it's rare. Here, when surveyed, Canadians had extremely high expectations, 92% in the 2013 survey. 92% agreed and strongly agreed that charities need to be transparent and disclose their spending. The other interesting takeaway from this information is what proportion of Canadians strongly agree. Not just somewhat agree, but strongly agree. Most Canadians strongly agree that charities should disclose and be transparent. So we take the expectation, the high public expectation, and let's meet that with the reality. So here's the information we have for 2022. 71% of the 800 charities we have reports on are following best practices in financial transparency. 71%, nowhere close to the 90% that is the public expectation. And I think you can see here this conflict we have with this closed book. 77 charities say, oh, we will provide our audited financial statements to you, but you have to request them. So you have to send an email, make a phone call. That's a point of friction. It requires follow-up, and you just got to keep doing it. And with 106 charities, and these would be some of the largest charities in Canada, a refusal to provide their audited financial statements. And as a public organization, they fall under the access to information. So last year, we filed 106 access to informations. The state of financial transparency in Canada's charity sector still, to me, is stunning. It's 2022, and that we have to waste so much time and money running down to get audited financial statements is not where Canada needs to be. Canada is so far behind, and I would have hoped it would have been voluntary and that charities would have automatically posted their PDFs. This is not the case. And so I do believe that this is a time when our government needs to regulate, and Canada needs to fall in step with other countries. So the question I asked to you as a charity, are your audited financial statements posted on your website? Best practices would be to have at least the 2 most recent years. Hi, I'm just going to jump into this presentation now to handle some of the questions that have come in about this. And these are coming in from small charities. that are saying we're a small charity and we can't afford to do audited financial statements. So, a couple of points I'd like to make. One, we're a small charity. So many charities say that they're small charities. And I'm not quite sure that we clearly understand what is a small charity. We were talking with one charity and they said, we're a small charity, and they had $24 million in donations. So that would be actually one of Canada's 100 largest charities. But small charities would be defined as, by Charity Intelligence, less than $1 million in revenues. You could be even smaller than that. So if you're a small charity, you have to know what the Charities Directorate guidance is. The Charities Directorate guidance is any charity with revenues over $250,000 should have audited financial statements. So you need to know the CRA guidance. How much does an audit cost? Now, typically, rule of thumb is 1% to 2% of revenues. In your market, look around, talk to good auditors and see if they would audit your charity. You might want to start your first year with a notice to reader, and that would sort of get the process underway before going into the full audit. Notice to reader is less money, but I really don't think it's worth the paper it's written on personally. But it's a good starting step. It's got you engaged with an auditor and it's getting your presentation following generally accepted accounting practices. And then the comment from charities are, we're really struggling for funding. We don't have enough money to spend on an audit. It's a little bit of a chicken and egg here, right? When you prioritize that you are going to do audited financial statements, that is what you spend, and that's your commitment to transparency. That's your commitment to accountability. And once you have those audited financial statements, then you can go to the next level. I know many private foundations, when they're doing their grants, they require audited financial statements. So you can't get funding because you haven't got audited financial statements. You may want to consider getting the audited financial statements, and now you can apply for funding from some of the private foundations. And I think I know with federal funding, again, it's a requirement to get government funding. You need to have audited financial statements. So the audited financial statements, I believe, should be seen almost as a starting point. So it's always like, well, we don't really need them. We haven't got the money for them. But without them, you really can't go to the next level as a charity. So I would see them as like fundamental day one. At Charity Intelligence, when we began in 2007, we were only $50,000 and it was all our own money. So why did we need audited financial statements? But I was told, get an auditor, get audited financial statements. I didn't see the reason why, but it was the best advice we ever got. And having that relationship with your auditor, you can lean on them, get a good auditor, and they will keep you abreast of all the new accounting rules coming down. They will see what other charities are doing so you can be, best practices. So I understand it's a struggle. You may be struggling to get funding, but if you really want to go to the next level, audited financial statements are essential. So back to the presentation. The other best practices of what information to include in your audited financial statements. The intention and the goal is you want your audited financial statements to be full and material and answer all the financial questions a donor has about your organization. So spending is the area where Canadians have the most questions about charities. 87% of Canadians say that information about how charities use donations is very important. The interesting thing, again, in this Mutat survey is when Canadians were asked how good a job a charity is doing in providing the spending information, only 26% of Canadians said that charities were doing a good job. So again, what you have here is this information gap between the high public expectations for disclosure and the reality. And you can see that this information gap has grown over the years. This is the single largest, biggest information gap So this is where charities really need to improve their disclosure. One of the comments we hear from charities when we're talking with their finance teams is, oh, we already provide that information. It's in our T3010 filing. And again, that moves away from the intention and the purpose of audited financial statements to provide full and material information. So when you say, oh, but we already provide that information, what in effect you're telling people is come to our website, and now you need to go to the CRA Charities Directorate website. And now most Canadians do not know about the CRA Charities Directorate website. And when they get to it, its search function isn't particularly user-friendly. So this is what you would see if you went to the Charities Directorate website. In the charity search, you have to have the exact name of the charity. Otherwise, it will say no results found. Or maybe an easier way is to go to the advanced search feature and type in the charity's 9-digit charitable registration number. So once you've gone through those steps, you can see here for the demonstration, you then need to click on the full view. And once you see the full view, you need to know that you need to go to Schedule 6 for the detailed financial information. And there you have the detailed financial information filed by the charity. So ideally, you would have all this information in one stop. But what you are in effect doing by saying, oh, go over there and look for it over there, is you are in effect sending your donors, your sponsors, your funders on this wild goose chase to get different information, basic information. And then the other issue you often have is the information in the audited financial statements does not reconcile with the information filed with the government. So let's make it simple. You don't want to make donors doing their homework and due diligence too onerous. Let's put all the information in one stop. The third best practice would be activities-based costing. So many charities along the top there, you'll see in the white section, charities are reporting their expenditures by salaries, occupation, professional fees, travel, insurance, and other line items. The best practice is actually activities-based costing, which you see on the right side there in the red column. You want to look at all your costs, and then management makes the cost allocations of what was a program cost, what was a management and administration cost, what was a fundraising cost, and please include the amortization cost as a separate line item. If you want to provide the salaries information and the rent information, that's great. That can be provided in a schedule or an appendix to the audited financial statements. Again, having all that information in one place. But for the income statement, best practices would be to have activities-based costing. I'm going to give you an example here. This is a charity that has good activity-based costing. You see here on the income statement in the expenses, it has a line item for program services. So if you add those two lines together, you would get total program spending. It breaks out its fundraising costs. It allocates its cost to general and administration, and bonus points. It has amortization as a separate line item. But with this charity, it's interesting because you've got about $14 million here in you got about $14 million here in program spending. And when you go to the charity's website, you can see on the drop-down menu that it has 4 major programs. So if you are a charity that has large program spending, I think $14 million is large, and you have distinctive pillars, to go from good to great, it would be ideal if your audited financial statements disclosed that program spending. Now, this charity is doing that. Excuse me. This charity is doing that in its annual report. So you can see here the $14.5 million, and it's breaking it down by its 4 key pillars. And you can see that physical and mental health services is the largest of its programs. But ideally, because the audited financial statements are professionally prepared and independently done, it's that second pair of eyeballs. It's that trust and verify. It would be best practices to have this breakdown of program spending in the audited financial statements. Sometimes charities say, listen, our audited financial statements are fine. The auditor has signed off on them, and we have an unqualified report. So this is where I would say the ball is in your court to charities finance teams. This is your opportunity to communicate. This is your opportunity to differentiate your charity from others by your attitude and your commitment to be transparent and to be accountable and to go for disclosure. Because the auditor, right there at the very front, puts this right back in management's court. It says management is responsible for the fair presentation of these financial statements. So the justification, this is the way we've always done it, doesn't really hold water. This is your charity's audited financial statements. Your management has full control about how it chooses to present the information. The fourth area I'd like to run over is fundraising revenue. Fundraising costs is the second largest information gap, second to the spending breakdown. You can see here that, again, like spending, the information gaps are getting bigger. Now, this last Mutat survey was in 2013. I know that for some charities, their financial disclosure has really improved. But I also believe at the same time, the public's expectations for transparency and accountability have also improved. So I would expect these information gaps to be pretty much the same today in 2022 as they were back then. So we can see the number one information gap is spending. We need better disclosure on a charity's spending. The second one is on fundraising costs. But the difference here is that the information gap caused by fundraising costs isn't on the spending side of the income statement. It's on the revenue side of the income statement. What we're seeing is this trend to have this line item called contributions. And contributions includes government funding and fundraising revenues. And these are lumped together as contributions. And this is a problem. This is a problem because the CRA has a definition of how to calculate fundraising costs. And government funding is not included in fundraising costs. So when you lump together government funding and fundraising revenue into that one line item of contributions, there is no way for us to see or calculate what the fundraising costs are. So it's really important that we, rather than having that contributions line, that you unpack it and you have one line for government funding and you have one line item for donations. And so the revenue side should, I believe, really show your funding by sources. So just to give you an example, here is one charity. And here you have in 2020 how it reported its revenues. Again, 14.5 million in revenues. And we get 3 line items. So we have this bucket of contributions and contributions. And then we have the government wage subsidy for COVID. And we discussed this problem with this charity that we have no idea what your fundraising costs are because you've lumped your revenue, you've lumped 2 sources together as contributions. So in 2021, it has unpacked this. And as you can see here, we now have contributions from donors, 315,000. And I believe that this is material information because the minute we see that $315,000 in donations, on an organization with 24 million in revenues, it to us it automatically shows you this is largely a government-funded organization. This is not a one that is of particular high interest to donors. Donors are contributing, but they are 1% of the total revenues. So I do believe that this disclosure is material. And if I can just pause and look at this slide, this is the minimal trend we're seeing. And I know that minimalism is sort of all the rage and everybody wants clean websites and, modern minimalist look is very much in. But when the information gaps are the biggest problem facing the sector, I really hope that the CFOs and the management teams of charities push back against this minimalist trend, because we need more disclosure. The public is asking for more information, not less. And just looking here, in that push to go minimalist, in that push to go 3 line items, maybe it's not material, but interest income was not separated. And that's a distinct revenue source. So everybody wants a clean income statement. Everybody wants it to be nice and tidy. But don't be tidy, don't be minimalist at the expense of information. If your charity is using deferred accounting and you're using this contributions, if you need to break out your contributions. If you're using the deferred accounting, you also need to, in the financial notes, segregate your deferred donations and your deferred government funding. So this would be best practices in how this charity has provided that additional detail because it uses the deferred accounting. So, and then the last point I'd like to just bring up is if your charity is lucky enough to have audited financials, if your charity is lucky enough to have donor endowments, these must be separately disclosed. Donor endowment is externally given to your charity. It's not an internal decision, and you can't mix internal with external money. And as an endowment, the charity cannot encroach upon the capital. And there are other regulatory requirements for endowments and payout ratios. So as a charity, if you have donor endowed funds, you can't just have that one line item endowed funds and mix together the internal board endowed funds with the donor external endowed funds. If you have donor funds, they need to be reported in the financial notes is fine. But it does need to be reported. So those are my 5 best practices. I want charities to be transparent. You've put a lot of effort into your audited financial statements. Make sure that at least 2 years are posted on your website. This is still a big challenge, so you can really differentiate yourself as a charity by being transparent, taking that open books attitude. I want your audited financial statements to provide full disclosure so that all the information to financial questions is provided in one spot, and we aren't on a wild scavenger hunt all over the internet to find information to put the picture together. We feel that activity-based costing is best practices, and spending is the largest information gap. This is where donors and the public have the most questions. Fundraising revenues, please separate donations, grants from charitable foundations from government funding. Government funding really needs to be on its own. And donor endowments are distinct in their disclosure. So I'm just going to, if you have any questions, if anybody even watches this, make a comment. But those are my thoughts on how we can make audited financial statements more important and better at meeting the high public expectations for disclosure and transparency in the charity sector. If you have any questions, get in touch. We're on Twitter at Charity Canada, and our email address info@charityintelligence.ca. Look forward to hearing from you. Thanks.